Hey there, and welcome to this explainer. Look, if you've ever felt like investing is this super exclusive, totally walled off club that's guarded by, I don't know, a bunch of confusing Wall Street jargon, stuff like yield curves, derivatives, or market cap, I just want to say you are absolutely not alone. Seriously, it can sound like a completely foreign language, right? And honestly, because of that, millions of people just never even start. They get overwhelmed. But today, we're going to tear down those walls together. We're looking at a super practical guide that literally transforms this incredibly intimidating topic into really clear, actionable steps. So here's our roadmap for today's explainer. We're going to kick things off with the cost of doing nothing. Then we'll move into thinking like an owner, cover time, money, and risk, and then discuss diversification made simple. Finally, we'll look at mastering your emotions and wrap the whole thing up with your simple investing roadmap. All right, let's jump in. First up, Section 1, the cost of doing nothing. So we really need to tackle this massive psychological barrier that stops people dead in their tracks. Like, why do millions of people never even start? Well, picture this. Imagine you're standing right on the edge of a swimming pool. You really want to learn how to swim, right? But instead of, actually getting into the water, you literally spend decades reading books about swimming. You watch endless tutorials online. You worry about how deep the water is, but you never actually dip a toe in. That is exactly how so many people approach their finances. Because doing nothing, well, it just feels incredibly safe. The fear of making a mistake just locks people on the edge of the pool for their entire lives. But here is the huge reality check, and it's kind of the invisible villain of an action. Inflation quietly punishes the people who do nothing. Every single year, your money is just losing its purchasing power. Now, you might not see the dollars actually draining out of your bank account, but man, you definitely feel it when you're checking out at the grocery store or when you're filling up at the gas station. It's wild. Choosing to do absolutely nothing is, believe it or not, still a financial decision. And it's the only decision that 100% guarantees your money loses value. All right, moving on to Section 2, thinking like an owner. To really get this, we have to completely shift your paradigm away from all those intimidating, flashing red and green numbers on a screen. The stock market honestly makes so much more sense when you stop thinking like a frantic, stressed out trader and you start thinking like an actual owner. Traders, they obsess over daily prices. It's a completely exhausting mindset, and it's almost entirely driven by fear and panic. But owners? Owners focus on the underlying business. Just imagine owning a tiny little piece of a super successful local coffee shop down the street. You aren't constantly checking the exact value of the shop every 10 minutes, right? No, you're just looking at, hey, are people buying coffee? Is the business actually growing? When you invest, you're literally buying real ownership in actual growing businesses. Factories, tech companies, railroads, the whole shebang. It is such a powerful mental model once it clicks. Which brings us to Section 3, time, money, and risk. Okay, let's talk about the actual secret weapons of building wealth and finally debunk this massive myth that you somehow need a huge lump sum of cash just to begin. Let's talk about $50, $50. Now, that might not seem completely life-changing, but imagine two different people. Person A starts investing just $50 a week early on in their life. Person B, well, they decide to wait years and years until they finally feel rich enough to start putting away much larger chunks of money. Fast forward a few decades, and guess what? That first person almost always wins out. And why is that? It's definitely not because they had more money to spare. It's simply because they started earlier. Think of it like a small snowball rolling down a mountain. It becomes massive not because it started out big, but because it started moving. Time is it's exponentially more important than money when it comes to investing. Most real wealth is built slowly, quietly, and honestly, almost invisibly at first. It just desperately needs the time and the momentum to start rolling. And while we're talking about this, we really need to redefine risk. You see, normal market volatility, the market just bouncing up and down, that's honestly just the price of admission for long-term wealth. Real risk? Real risk is buying something you literally cannot explain. It's blindly following crowds or chasing some crazy social media hype just because an influencer promised a quick return. The true danger here isn't the stock market. It lies entirely in not understanding what you actually own. Let's jump into Section 4, diversification made simple. So you might be wondering, how on earth do we actually manage that risk if we don't have some advanced math degree? Well, think of yourself as a really smart farmer. Would a smart farmer ever in a million years plant just one single crop? Definitely not, because one bad storm or one weird crop disease could literally wipe out their entire harvest for the year. And investors face the exact same challenge. Spreading your money out across different companies, totally different industries, and different types of assets is exactly like planting multiple crops. You're not trying to plot a crystal ball and magically predict the future. You're just preparing yourself for multiple possible futures so that one single bad storm doesn't completely destroy your financial harvest.
Next up is Section 5, Mastering Your Emotions.
Now, we absolutely have to talk about the behavioral trap here because how you react to changing headlines is actually by far the hardest part of investing. The investor's greatest tools, they aren't complex 100-page spreadsheets. They are patience, discipline, and emotional control. Because think about it. When markets go up, people get overly excited. When markets drop, people are suddenly terrified. The news headlines are constantly changing, but human psychology, that basically stays exactly the same. It is so common to see people buy in when everyone is super optimistic and then totally panic sell when the crowd feels scared. But if you can master these simple emotional behaviors, literally just remaining steady while everyone else is panicking, you will create far more wealth than any complex prediction model out there, for sure. And finally, Section 6, your simple investing roadmap. So here it is. This is the concrete, step-by-step process that proves successful investing is wonderfully, predictably boring. Okay, step 1, build an emergency fund. Got it? Step 2, eliminate high-interest debt whenever you possibly can. Step 3, invest consistently. Remember our $50 snowball? Step 4, diversify across those different crops we talked about. And step 5, just stay invested. Now, did you notice what is brilliantly absent from these steps? Not a single one of them requires you to predict the economy. There's no guessing tomorrow's stock prices. It's just purely about following a proven process. The financial industry often kind of wants you to believe that you need all this massive complexity to be successful. But here is a really empowering realization. The people who actually build wealth over their lifetimes, they are not always the smartest people in the room, but they are very often the most consistent. Wealth is built through simple, repeated habits. You just start, you learn as you go, you stay incredibly patient, and you just let time do its thing to compound your money. There's this great quote, information is everywhere. The edge is how you think. I mean, we are constantly, literally 24/7, bombarded with data and financial news. But your true advantage, your real edge, is that mindset shift we've explored today. Moving from being this paralyzed observer standing by the pool to becoming a patient, long-term owner. So I want to leave you with this question. What is the simplest financial habit you can start today to build your edge? Think about it. Thank you so much for learning with me today, and I'll see you in the next explainer.